Sarah, is Lynn correct in saying that the worst is yet to come?
I think that's the general agreement right now. Of course, we saw these $16 billion of tariffs and the retaliation by China today. So overall total now in trade, $100 billion of goods between the U.S. and China have been levied some duties on. But this $200 billion is really where things will start to get sticky. And I think that goods and a lot of goods that you'll see out there in the Silicon Valley are where will really hit consumers' pocketbooks, and that's the 200 sort of starts to nibble into those kind of goods. And so I think these trade talks that were in Washington today, that as far as we know, we're wrapping up just about now. It's about 5 o'clock in Washington. They're aimed at averting the 200 billion at a further escalation, but there isn't a lot of hope that they're going to get there.
Right, these are low-level talks. So what is the likelihood that will actually lead to any sort of progress?
So, of course, at this stage of the game and in basically a trade war situation, you're definitely going to need the highest level. You're going to need President Donald Trump to buy into any agreement. And I think at the low level, as Commerce Secretary Wilbur Ross said yesterday, it's better to engage than to not engage. But what we've heard is that the Chinese have really not brought anything new to the table. They've said, we're willing to buy more American goods, essentially, and try and reduce that trade deficit. And the U.S. is pretty stuck in its stance that it wants to see sweeping changes to China's economy. It wants it to end forced technology transfers, to end state subsidies, to bring their tariff levels down to the same that the U.S. charges. And China has not been willing to do that. It goes against the model that it's following and its plans to develop its own economy. And so you really see a standstill situation, and one that's hard to get out of.
And the question remains, Sarah, which country has the advantage? We spoke to an economist earlier who believes China has that advantage. Take a listen.
I think China's pretty well placed to just absorb this by throwing money at it. More fiscal stimulus, more currency weakness, more liquidity, just to keep things propped along. But it does still hurt all those goals that President Xi had put in place, the deleveraging, the getting rid of all the excess capacity. All that's gone on hold, if anything, gone backwards. So that's the real pain, rather than a big hit to the GDP for China.
Sarah, what do you make of that assessment?
Well, I guess there's two sides to any coin, and the Trump administration would argue it's actually in a better position right now than China because, as we all know, the U.S. economy is ticking along. We saw more than 4% growth in the second quarter. Unemployment's pretty low. There's this record bull run in the stock market. So the Trump administration believes it's in a better position than China, whose economy is weakening. The yuan is obviously also down a little bit, stocks. And so, according to Donald Trump, this means that China has a little bit less room to run if there is a trade war. So I think there's a couple of ways to look at it. Obviously, for either side, it'll be how it hits the economy that could have the biggest effect. When consumers start to feel the pinch, that's really when I think they'll speak at the voting booth. And then politically, from China's point of view, obviously the president Xi Jinping holds pretty tight power there, so he's got a little bit less to lose than Donald Trump. We have the congressional midterms coming up and the election just 2 years away. And so I think there's a political calculation to be made as well.
Now, there have been so many lists of goods that could potentially be taxed. It's a little bit confusing, especially since some of this hasn't happened yet, may never happen. We just don't know. What are the tech products that Silicon Valley needs to be concerned about?
So in this first round of, essentially a total of $100 billion in both tariffs from the U.S. side and the retaliation, we don't see a lot of those kind of tech products being swept up, that there's a huge cry or concern. And even with the $200 billion list, which of course could still be revised, there's hearings this week in Washington, and there's all sorts of companies asking that items that they use be removed or that some items be added. It's still a work in progress. Again, we don't see like big ticket items like cell phones and laptops and TVs, a huge amount of those on these lists. But Donald Trump has kind of toyed with the idea that everything from China would be hit, $500 billion of imports last year, and he's flagged that as a number that he could target, which would mean everything. And of course, that would really start to hit the supply chains of companies like Apple, who have most of their production in China.